Good morning from Los Angeles. It's Alissa, Coram, and Ed Carson here with your market update. It is Monday, January 28th, and on today's show, we're going to be taking a look at Nvidia as well as Caterpillar and Boeing. But first, let's check in with those major indexes. We are down across the board. The Dow and the NASDAQ both down about 1.2, 1.3% each, while the S&P 500 is down 1%. So a pretty ugly day that we haven't seen this this level of losses in a while.
Yeah, I mean, if we look on a chart, it doesn't look that bad because, you know, we sort of had a pullback last week, paused, but ultimately we were about flat. The NASDAQ and Dow were up a little and the S&P down. So, I mean, from a charts perspective, then, you know, the NASDAQ, the major averages look okay. Most leading stocks, they're looking fine, and yeah, they're having a pullback. So this can be constructive in the sense, you know, and we'll talk about it more.
Right.
But we're forming some, you know, there's definitely some things like this can be helpful for leading stocks.
Well, we'll definitely be keeping an eye on the broader market action. But first, we want to check in with shares of Nvidia, down about 13% in heavy volume, though off of the low here. And it's the outlooks. Nvidia now sees Q4 revenue of $2.2 billion. The prior guidance was $2.7 billion. So when we had seen chip makers do well on earnings last week, Intel didn't have a good report, and now this outlook from Nvidia not so good. Yeah,
Nvidia was down hit really hard, and AMD, which rivals Nvidia in a lot of things, that one was particularly hit hard. I mean, obviously Nvidia is down sharply, and it's just sort of like Nvidia had already had a really big shortfall, I think, for this quarter of $1 billion, and then to miss that one really sharply. They were warning about China, worrying about data centers. Just a bad sign for the chips in that regard. You know, obviously Nvidia has not been doing great, but a lot of those chip makers hard hit. Xilinx, which was the big hero last week, that one was actually up at the last read, so that was positive. But there is a concern if the chips are not going to do as well, because that was a big story last week.
Right, and even though before today we had seen Nvidia come nicely off of that low, retaking the 50-day moving average, this just goes to show you don't want to be buying stocks, even if they have rallied, if they're not forming base patterns and have proven that they're trending higher.
Absolutely, absolutely.
Okay, and next on our list is Caterpillar, the Dow stock, down almost 9% in heavy volume after issuing its quarterly earnings report. A slowdown in earnings, up 18% versus a 47% gain the quarter before. Also a slowdown in revenue here, and that earnings number also missed analyst expectations, and revenue was just in line with views.
Yeah, and their guidance was not very strong. It was a really bad report, and this is an economic bellwether for the world, because it's like this is a big maker of, you know, construction and mining equipment, and so it's not a good sign for China. It's another sign with Nvidia. Again, there's a lot of things. If a corporation's warning nowadays, it seems to be China, and so that's a really bad. That's a knock there. Again, this is a stock that wasn't doing particularly well. It was trying to get up to its 200-day. It actually had bottomed back in October. So I mean, there was some, hey, maybe it's coming back. But this is, you know, it's a negative for the Dow. It's a negative for the global economy.
That's right. And Boeing is another name that we've also seen having trouble since the China trade war issues started, and it's down today with the general market. But I would say it is holding up relatively well still, and we could be seeing an earlier entry here as far as buying the stock.
Yeah, it was sort of in a weird situation last week because it was a shortened holiday week. But the market pulled back, and so we saw a lot of little handles starting to form. But Boeing had a 4-day handle, and after today, it'll be 5 days, and that's the minimum you need to be a proper handle. The reason why we do that, it's not just to be this technical, oh, we got to have 5 days. It's because you want to see a shakeout. You want to see the stock falling a bunch of days, and then that will mean, you know, like maybe some weak holders. And so when the stock rises, nobody wants to sell.
Right. Yes.
And so that could form a handle by point off of that. Before it formed, had sort of an odd-looking double bottom base. So that's a proper. There's definitely been some other stocks that are like that.
Right. So then the new buy point would be at 367.42. So you're just looking at those recent few trading days, and that's where the handle would be forming on the base.
Absolutely. And as you know, Salesforce and Microsoft are a couple other stocks. There's a number of them because, again, the market had that 4-day pullback. Maybe this is sort of 5 days. You know, those are other stocks. And Boeing, Microsoft, and Salesforce, you know, well, no, Boeing and Microsoft have earnings this week. Salesforce does not. So that's something else to keep in mind.
Yeah, you know, of course, handles without, bases without handles can definitely work, but that handle, as you mentioned, interesting to look for as it does have that final shakeout of weak holders before a potential move higher.
Absolutely.
Okay, everyone, thank you for joining us today. Be sure to check out investors.com for all the latest market news and analysis, and you can check us out also across social media. We are on Facebook, Instagram, YouTube, and Twitter, so make sure you're following and subscribing for the latest. Thanks again for watching, and we'll see you back here tomorrow.